Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Monday, first day of June 2020, and this is the daily report for gold and silver. We had the precious metals higher on the day. In fact, spot was leading gold futures, but gold futures right now are at $1751.60, putting it up about $1.60 and tracking higher as it opens in the Australian market. We do have a current trade. We are long from 1740. We have a stop in place. We will look to raise that stop later on this week, but we will talk about the different support and resistance levels when we look at our technical studies. But first, to the price board. There is no doubt, but spot gold is actually leading the way when you compare it to gold futures, and all of the precious metals did trade higher besides gold futures, which was down 90 cents at 1750.80, but it was all due to dollar weakness. We'll talk about that in a second. But when you look at spot gold, you can see that spot gold, or Forex, was actually up $9.87, 1739.20. Platinum was up about $25 on the day, 2.85%. It is at $899.50. Palladium scored about a 0.5% gain also, $10, putting it at $1983.50. And silver gained a hefty 1.74%, or 32 cents, putting it just below $19 at $18.82. Now, a lot of that had to do with dollar weakness. The dollar was down by call it a 0.5% at 97.83. And when you compare that to the rise in spot gold, you can see that the differential is only about 0.05%. In other words, spot gold was up 0.57, whereas the dollar was down 0.52, the differential being 0.05, and that was due to buying in the market today. Very, very interesting day. Let's take a look at our technical studies. The first chart that we are going to be looking at is the actual dollar index. You can see that it was certainly down today, down about a 0.5%. It is sitting right at the 0.618% retracement level, which comes in at 97.70, and that's roughly the low. If we see it hold here, we'll probably get stuck in a channel between 100 and 97.75, call it. However, if it breaks below this particular level, it's a pretty key level, I really believe that we could see it go to 95.85. That is, you can see a series of bottoms that come in right here, showing that that is a level of support. However, really strong support will not come in until it matches this bottom at about 94. And that's pretty much where we could see the dollar go over the next, say, 4 to 6 weeks. That, of course, would be highly influential on the precious metals that are paired against dollars. Interesting trading on the first day of this month, June 1st. We are looking at gold futures, and what we can see is I have identified the fact that in essence what we are looking at is kind of called a flat top, and that is because you don't have a series of higher highs or higher lows. You have attempts to make a new high, such as here and here, but in both cases it failed. So we've got real resistance that comes in roughly at 1760, and then again at 1774, with major resistance at 1788, and that of course is this high here, the high of the year. The big brass ring maintains itself right at 1800. If we look at the bottom of this, it's different than what we've seen in terms of pricing at the top, because here we are definitely getting a series of higher lows. We do have exceptions where the lows are extreme, such as right here. Today, you can see that we did get a higher high and a higher low, but it closed in essence unchanged on the day. That's why we're getting what is called a doji. A doji can mean consolidation. It can also indicate a potential top in the market. However, that typically would come if the market had traded to some kind of a new price high, which we haven't seen. However, we do have resistance right at these tops. The market is currently trading at 1750, and the resistance is going to come in at around 1770 to 1765. If we continue to see it rise, we will raise our stops, and we will see how it reacts at these particular price points. Now, in terms of spot gold or Forex, which is what we are looking at, simply put, resistance and support levels, we do have resistance at 1763.70, and that is based upon this high, or the highest point it is traded this year in spot. We definitely have very strong support at 1691.80. That's the 23% retracement. This retracement simply goes from 1448 up to 1763. And lastly, I do want to take a look at silver futures, up 32 cents today. We talked about this a little bit on Friday, but in terms of a long-term view, we do have a retracement that starts at the lowest price it has traded to in years, which is $11.65, and then 1901 is where we're pegging resistance. That's the 0.23% retracement. To see where that actually starts, what we need to do is to actually compress this chart. And when we do that, you can absolutely see the starting point from this fib retracement. It comes back to 2016's high at 21.21. It also then tracks down to these lows that were achieved just this year at 11.66. If it breaks through this particular area, which is $19 per ounce, it does have a little bit of resistance at this one top, which comes in just below $20. I'll try to make it as even as possible. And if it's able to break through there, the next real target has got to be $20 to $21 in silver. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.